We've got Salesforce earnings tonight, Zscaler, and some more cloud companies the next couple of days, but for the most part, earnings season is done. Let's check in with Shiraz Mian at Zacks, who's been tallying up the results, Director of Research at Zacks Investment Research. So Shiraz, how did we do this past quarter?
Overall, pretty good, Oliver. Growth, as expected, was significantly below what we had seen in the first half. Primarily a function of easy comparisons in the first half and relatively more normal comparisons in Q3. Beats the proportion of these companies beating EPS and revenue estimates by historical standards was pretty high, but again, below what we saw in the first half. All in all, I would say a pretty strong earnings season. In fact, the dollar tally for the quarter reached a new all-time record. On the negative side, there was some disconcerting commentary from management on margins, on trends and expenses, and the revisions trend, which had consistently remained positive over the preceding 4 to 6 quarters, started turning negative. So that's all in all, I would say would be a summary of the big earnings picture.
So, Shiraz, seeing that we've got a little bit of a tougher comparables after that first hit from the virus, the quarters at the end of the second half last year and coming into this year, we basically had a good bit of activity in tech, some of these other areas of the economy that kept pumping. What do you see when you look forward now? What does that hurdle look like to keep up some of that growth in the highest octane areas?
So we still have plenty of momentum on the cyclical side of the economy, and some areas appear to be at risk with these supply chain issues, with these inflationary trends, and that's what's driving the revisions trend. As you're showing in your chart, you could see that there's still positive growth in the last quarter and into the new year, but a lot more decelerated growth relative to what we have seen in the recent past. And if this revisions trend that we have been seeing since the beginning of Q4, if this accelerates and turns more negative, then we may have issues with the growth outlook for 2022.
Okay, so looking at this, we see that the next couple quarters, I mean, it's getting pretty thin. Shiraz, and obviously we can't see too far into the future, but that basically means that we're on a pretty serious downslide, it looks like, from here.
So the takeaway, obviously, this is from this visual, the comparisons to the first half when growth was like in Q2, which is compared to the bottom of the pandemic last year, earnings practically doubled. In Q3, as you see here, we are up about 40%, and then in the last quarter, about 19%. This is still positive earnings. So earnings from very high, like even record levels, are still growing. But yes, the trend is on the decelerated front. And as I mentioned, if the revisions trend gets negative further, then it could flip. It could flip into declines.
Shiraz, so we're talking growth rates here that are just going to be basically impossible to live up to in the short term. But to your point about the cyclical stuff, there is a way the economy could power up that could drive growth in some of the areas where those comparables will be easier, right? The areas that were most affected by COVID from that standpoint. Is that a correct description?
Absolutely. So the momentum in materials, in industrials, in energy, in fact, even finance is very, very strong. The auto sector, as you know, we have a relatively different sector classification compared to the official Standard & Poor's GICS. So the auto sector outlook is very strong as well, though it's literally been in the eye of the storm with the supply chain issues. And in 2022 and beyond, the outlook for them is very strong. Same for housing. So while some areas look tired and appear at risk with margin squeeze, retail in particular, some parts of technology, many others are in pretty good shape and should continue benefiting from, as you described, the strong momentum in the economy.
Now, our estimates for next quarter, if we zoom in on them, have been steadily declining since October, even though it's only from 20.6% to 19.3%. That did get revised down a little bit, but not too far, Shiraz, and it looks like compared to a couple weeks ago, this is leveled out somewhat.
So it's still going down. It's in essence, it's fractional, so not a whole bunch of declines. But in terms of the trend, it's still negative, Oliver. So from mid-October onwards, in the aggregate, if you look at the dollar total earnings estimate for the S&P 500 for Q4, the total has come down about 1%. Now, when you look under the hood, there are some moving parts, particularly for energy, for example, for finance. Estimates have gone up. If you strip out energy, then the decline since the beginning of Q4 is about 2.5%. The same is the trend for the first half of next year. We are seeing estimates come down in the aggregate for a whole number of sectors. And then some sectors are experiencing positive revisions. Energy, again, is a major beneficiary there. And that's been the trend the last few weeks. And it's unclear how that trend will evolve as we head into the Q4 earnings season and the outlook for the remainder of 2022 evolves.
Okay. Shiraz, before we say goodbye, I want to make sure we discuss retail specifically, as that's going to be a focus here closing out the year. We're going to talk about later on the show, too. Just looking at the revenue beats compared, looking at recent versus the long-term averages, it looks like we're fairly elevated next to the 5-year average. This quarter beating at 81.3%. compared to 69.8 on average. Think we can keep that part up?
I think there is the issue on the retail front has been companies' ability to meet the very strong demand. So there's not a revenue problem. It's not a sales problem. The problem is in the line items, how good expense management for many of these teams is, and the extent these management teams can sustain and maintain their margins. The revenue picture is extremely good. We, in fact, in the recent past, haven't seen this much positive backdrop for the traditional retail space.
Okay. Not a bad setup here for us to think some more about what's going to happen over the holiday season the next month. Shiraz, thank you as always for the wrap and the look ahead at U.S. corporate earnings.
Always my pleasure, Oliver.
Absolutely. Thank you. Shiraz, Director of Research at Zacks Investment Research Options.